Is it really episode
It's
6?
episode 6, Gold
No.
Rush Hour, episode 6. I wanted to tell people, if they have questions or topics they want us to talk about, to please leave them in the comments, because we want to hear from people. You know, we're pulling from comments on our other videos, but if there's anything specific that you
Leave
hear
them in
or
the
see,
comments of this video.
Yes,
Okay.
yes, that'd be great.
And you'll check them out.
Absolutely, yeah.
What is the main thing that you're seeing in your research right now?
The biggest thing over the last week has really been the U.S. credit rating downgrade and the subsequent treasury yield spikes. I think that a lot of people are following it closely, but then there's a lot of people who just don't understand maybe why this is such a big deal or how serious this is. And it absolutely has kind of been taking over my mind for the last week.
Okay.
Yeah.
And so, do you think it's serious?
Yes. Oh, yeah, absolutely. I mean, the number one, Moody's downgrading the U.S. credit rating. This is the last of the big three to downgrade, right? So the U.S. had the highest level AAA score. They have now lost that. This is so important because there are other countries that don't have AAA, but not the reserve currency country, right? I mean, this is so important at a time when countries are already moving away from the dollar, when there's already an erosion of trust in the dollar, in the United States, and our debt. And we're seeing this spike in yields, which essentially is, you know, how does the U.S. finance its debt? We have almost $8 trillion maturing this year. You can pay it off or you can roll it over. We're obviously not going to pay it off.
No.
We can't afford to.
No.
So what do? We roll it over at the newer rates. Well, when the yields go up, you can think of it as really the premium that we're paying others to hold our debt, to buy our debt. So every time that goes up, it's costing us more. This is what we mean when we say unsustainable debt cycle. And I think there are a lot of people who they hear treasury yields or downgrade, and maybe it starts to feel a little technical, which it could be, but it doesn't have to be. At the end of the day, really just think of it as it's costing more to take out more debt, and all we're doing is taking out more and more debt. Let's say if you're an average person and you have a pristine credit score, and suddenly your personal credit score drops. Well, you are going to take out debt, it's going to cost you more, right? The same goes for the United States. Moody's has kept this rating for over 100 years through wars, recessions, depression, and suddenly they're choosing now to do it. That's how you know it's bad, right? Mm-hmm. And now other countries who have for so long already been trying to move away from the dollar, they now have a concrete reason they can point to and say, you guys aren't as trustworthy. Your debt, we can't trust that you're going to pay back your debt. And some people like Ray Dalio have come out and said it's actually worse than most people think, because those downgrades only take into consideration the ability to pay back the debt as is, not even us printing our own money to cover our debts, which is really what normally happens when you're in so deep, right? That's what we've seen other countries do, and that's really kind of where we're heading.
Do too.
Yeah, exactly.
It's just more of the same. All it is now we have to print even more money.
Correct.
And that's the problem. That's the big elephant in the room that everyone's trying to ignore, is that we just continue to print and print and print. It's accelerating at astronomical levels.
And I think the big question that people I often see right in on our videos, they ask, what does that mean for me? For my savings, for my retirement? And I know we've talked about this before, but it makes sense that, of course, people are concerned about how this is going to impact them.
Mm-hmm. Well, it's just going to keep making everything more expensive. It's going to devalue the purchasing power of the dollar, which means that your investments and your wages have to increase at higher and higher rates to keep up with the higher and higher inflation.
Mm-hmm. Mm-hmm.
Right?
Yeah. It's just more of losing your purchasing power. I mean, like you said, it's more of the same, but I think what's different now is it's an acceleration.
Bingo.
It's happening faster.
Mm-hmm.
We can all feel it. Now we can see it. I mean, again, and I think it gives really almost a green light to these other nations to move away from holding U.S. treasuries, from buying U.S. treasuries, something that we've already seen them doing. But again, I could expect that this is going to happen faster. We just had an auction today that had abysmal turnout on the 10-year treasuries going up again. So I just think this is not the end of what we're seeing. It's really only the beginning, in my opinion.
Yeah. Well, it's like the frog in boiling water, right? It starts off in lukewarm water and it goes boiling, and you don't really notice it until the frog is dead. And that's exactly where we're at. I mean, it's been happening. The long-term trend is the dollar's been losing its purchasing power since 1913 when the Federal Reserve took over. It accelerated in 1971 when they took us off the gold standard. I think it's lost, I don't even know, it's like 90% of its purchasing power since 1971, like 75% since the 80s, lost 25% over the last 5 years. So the trend is accelerating, and it just keeps getting to more and more unsustainable.
Absolutely. We're seeing central banks continue to buy gold at record quantities, the most in modern history. And there's a reason why, because unlike the dollar, gold, of course, is going to be a true store of value.
The reason why they're buying gold is because they know the one that controls the gold has the power. That's real money.
Yeah.
And so central banks continue to pile on as the dollar continues to lose its status. That's only going to continue because gold's the only real money. Every other money is really printed. And so that's why they keep buying it. It's because they want to protect themselves. They know that gold will protect them from the onslaught of dollars that are being printed.
Yeah, 100%. I don't know if you've been following all of the record COMEX deliveries too.
No, tell me about it.
So essentially, I mean, typically in terms of actual delivery of physical gold, it's relatively low. I think historically on average, it's less than 1%. So we're talking about paper gold, right? Which isn't real gold, just paper gold being traded again and again. And it could be one ounce of gold that's being resold 100 times over, right? Versus real physical gold where if you hold it, you own it. Now, we're seeing this insane amount of delivery that's happening right now. I think we're already up 700% today in May compared to May last 2024. Why are so many people demanding delivery of physical gold?
Well, why do you think?
Well, I think it's, again, these central banks. I think they're large institutions. One delivery equals, I think, about $300,000 worth of gold. So this isn't necessarily mom and pop. These are large buyers because we're talking about tons and tons of deliveries here. These are billions of dollars worth of gold that are being delivered. And I think, again, this is going back to what is real, what is tangible, what can you have trust in? And it's not paper, whether it's paper dollars or paper gold. People want the real deal. And these institutions want the real deal so that they can position themselves. It's not just a trend, right? This is positioning for something much larger, in my opinion.
And what do you think that is?
A reset. A reset, which, again, I know we talk about too, but I continue to see questions.
Oh, hold on a second.
Oh, Josh.
Hey, Josh.
Hey, boss, I have a client question if you have a minute.
Well, we're currently right in the middle of our gold rush hour.
Hey, Josh, it's Taylor.
Oh, sorry about that.
No.
Hey, Taylor.
Hey.
No, it's all good. I think it's actually perfect timing because we can just ask you some questions. Josh has been with us for, gosh, I think you started back in 2007. Is that right?
2006. I was
2006, almost 20 years. So you could say you have a lot of experience, right?
Yeah, absolutely. I've been doing it for a while. I've been buying metal since I was 19. I've been, love what I do, and I'm happy to do it.
Oh, I don't actually think I know this, Josh. Since 19, what got you into this originally, or what? Have you always just been passionate? Did you grow up with that? Was there something that kind of made you?
Absolutely. So what got me into it originally is, I was thinking a bit about that the other day, because, we just in the office kind of celebrated a milestone and anniversary me being with ITM Trading. And when I first got into it, I think as a very young person, I just wanted to understand how things work. I wanted to understand, not be told, but really understand myself. So that led me into gold and silver. I found Robert Kiyosaki back in the day, and I actually remember going down to the annex as a 19-year-old in LA, and to go see Robert Kiyosaki, and he had like a silver booth there, and bought my first ounce of silver.
From Robert Kiyosaki?
From Robert Kiyosaki at 19.
You were 19?
That's why, yeah, I was
that's
19.
fun.
Yeah, and so it's, a lot of full circle moments. I've listened to everything he puts out, as a young kid, rich dad, poor dad. And that led me on a journey to kind of understand myself. And I got an interview at ITM Trading. I had just turned 25, and they hired me on the spot because I was, again, a big nerd talking about M3s and the Fed data, the data that we
not M3
analyzed.
The car, M3 the money supply.
M3 is the money supply, right?
So you and I were just different. We were different back then. I was talking about M3s the cars, and you were talking about M3s.
Yeah, that's how I fell into it. Be curious.
So then, while we have you on the phone, like, what's the biggest thing that you see right now going on that you think people should be aware of?
Yeah.
Oh, wow. I mean, there's a lot to unpack there. Yeah, the most important thing is understanding that the crisis in the dollar debt situation, it's not an event down the road. It's not something that is, something that we're waiting for. Because of what they did in 2020, by hyper-ballooning the dollar and creating more money in 1 year than the previous 8 years combined, in my view, changed everything. And that brought that future event that was probably 20, 30 years down the road. A lot of people understand we're living through history on a daily basis, weekly. It's happening right now. We're seeing historical events everywhere. And so understanding that we're living through that history, it's a state and a process of collapse. I think that's the biggest blind spot that most people have, that even talking to people that are savvy and people that are really tailoring a strategy around the research we've done to make sure it's tailored to their success. So it depends on the person, but I think the most important thing that people start to realize after we do have a conversation is that we are living that history today. And I think that's the most important thing, that it is inevitable. We're in a debt crisis. We're adding $1 trillion of debt every 90 days or less. The interest is going straight up. We just had a negative GDP of reading, which, historically, 2 negative GDPs in a row, historically, is a recession. So all these things happening at once. Moody's downgrading us on Friday. With the current climate, I mean, the signs are everywhere. The urgency is there. It's just that people they're so busy with life and family, they have a hard time connecting the dots, right? So I like to make it easy for them. I'm obsessed with this market, so I get to study. They get to spend time with their family, knowing that they have a team of experts, showing them, connecting the dots, and keeping them ahead of what's happening. So it really is understanding that we're living that process today.
Well, cool. That was cool to get to talk to you. I appreciate you spending the time. I'll call you back later about whatever the question is, because we don't need to answer it on camera.
You got it, boss.
All right, we'll talk to you later.
Bye, Josh.
Talk to you later. Bye.
Well, that was cool.
Yeah. That was random.
That was a great story, too, of how he started. I didn't realize,
How cool is it that he bought his first ever silver from Robert Kiyosaki? That's neat.
That is really neat, yeah.
I've known Joshua since I met him in 2008 when I came to ITM Trading. He'd already been there for 2 years, and we became friends because we were both young, together back then. And he's always been that passionate about it. One of the most knowledgeable people that I know in regards to like the inner workings of how it all works, right? And but what's cool is we have so many people. We were just talking about that this morning on the meeting. We were making jokes about one time when we all went out together 10 years ago, and I was like, wow, we've really all been together for that long, like 20 years, a lot of us, because we're celebrating our 30-year anniversary this year. In October, we'll have been in business for 30 years. My dad started the company in 1995, and it's cool to think that there's a lot of us that have been together for 20 plus years of doing it. And so that's really neat. Really, truly is a family.
I want to hear more about whatever those stories were that you guys were joking about on the call this morning. Sounds like some fun times. I know that, I've been with ITM now only for a couple of years, but I immediately felt that sense of family as soon as I joined, which is so important. I mean, I know we talk about community a lot, but to walk the walk and not just talk the talk, I think, is something different, something special.
Well, so let me ask you a question.
Yeah.
Do you ready, or should we get coffee?
Oh, is that the question? Yes.
Okay.
You already did.
That's
In
a
the
wrap.
books.
That's a wrap.